So when you think about retirement, your mind probably jumps straight to a 401k or an IRA, right? I mean, that's what we all hear about. But what happens when you've maxed those out and you still want to save more? Today, we're going to dive into a tool that gets talked about a lot but is also, well, pretty misunderstood. Indexed universal life insurance. We're going to break down what it is, how it really works, and most importantly, who it might actually be right for. Let's get into it.
Okay, so let's start with a really important question. Just imagine for a second. You're doing everything right, you're saving like crazy, you've already hit the contribution limit for your 401k and your IRA for the year. That's an awesome problem to have for sure, but it's still a problem. Where do you put that extra money so it can keep growing with some tax advantages?
For folks in that exact spot, the answer usually isn't found in the usual places. It's time to start looking beyond the traditional accounts and explore a totally different kind of financial tool, one that's built for a very specific job.
And that's where this whole conversation gets really interesting, because there is another place to find that tax advantage growth. But let me be super clear about this from the get-go. This is not a simple investment. It is definitely not a one-size-fits-all solution. So let's pull back the curtain and get right to it. What in the world is an indexed universal life insurance policy? You'll hear it called an IUL. What is that?
Okay, so at its heart, an IULs is a type of permanent life insurance. That means it's designed to last your entire life. It's got two main pieces, a death benefit that goes to your family and a cash value component. Now, here's the really unique part. That cash value can grow, and its growth is linked to a stock market index. But, and this is key, your money isn't actually in the stock market.
Let's break that down even more. First, you get that lifelong death benefit protection. Check. Second, any growth you see in your cash value is tax-deferred, which is huge. Third, the interest you get is connected to how an index performs. Think something like the S&P 500. And finally, and you really got to pay attention to this one, you have downside protection. There's a guaranteed floor, usually set at 0%. That means if the market tanks, you don't lose money in your cash value.
Okay, so that's the what. Now, let's talk about the how. How does this thing actually work? Understanding the mechanics is everything if you want to figure out if this is right for you.
It all starts when you pay your premiums. A piece of that money pays for the actual life insurance and any fees. The rest, it goes into your cash value account. Then, that cash value gets credited interest based on how that market index did. Now, remember that downside protection we just talked about? Well, there's a trade-off. Your gains are usually limited by something called a cap. So let's say the cap is 10%, but the market rose ahead at 15%. Your interest is capped at 10%. Make sense? And then, as that cash value grows over time, you can get to it, often through tax-free loans.
And this right here brings us to the most important question of all. This is the one that really matters for families here in Georgia who might be thinking about this. Is an IUL actually right for you?
So let's just lay it all out. An IUL could be a fantastic fit if you're a high-income earner, and you've already maxed out your 401k and IRA. It might also be perfect for a business owner whose income goes up and down, and who needs that flexibility with payments. Or maybe you just really want to build up a source of tax-free income for retirement. On the flip side, you should probably stay away from an IUL if your number one goal is getting the absolute highest market returns. Those caps will just drive you crazy. It's also not a good fit if you can't commit to funding it for the long haul, or if you're a savvy, disciplined DIY investor who's happy managing your own stuff.
So let's just quickly recap the good stuff. The upside is you get tax-deferred growth and the potential for tax-free income down the road. You get flexibility with your premiums. You get that all-important downside protection when the market gets rocky. And of course, it can be a really powerful tool for estate and legacy planning.
But, we have to be real about the downsides too. The fees and internal costs can be higher than what you'd see in other investments. Those caps we keep talking about, they absolutely will limit how much you can gain. These things are also really complex, not something you want to try and figure out on your own over a weekend. And your returns can be pretty modest. And this is a big one. If the policy isn't managed or funded the right way, it could actually lapse, and that can create a massive tax headache.
And I really want to hammer this point home. An IUL is a long-term game. You should not go into this expecting to see any kind of meaningful growth in your cash value for at least the first 7 to 10 years. Seriously. This is all about patience and planning for the distant future, not getting rich quick.
So how does an IUL fit in with other kinds of insurance? Well, if you look at term life, it's totally different because it has cash value and it's for your whole life. And when you compare it to whole life insurance, which has a fixed growth rate and rigid premiums, the IUL gives you that potential for index-linked growth and flexible premiums. It really does sit in its own unique little spot.
All right, so after going through all of that, what's the big takeaway? What's the final verdict on these IUL policies?
Here it is. The most important thing to remember is that an IUL is not a traditional investment. Don't think of it as a replacement for your 401k or your brokerage account. It's a hybrid strategy. It's made for a specific type of person who wants a combination of things: lifetime insurance, moderate, tax-deferred growth, and flexibility. The goal here is not to shoot for the moon with max returns. It's a balanced, long-term play for a very specific set of goals.
And that really just leaves one final question for you to think about. After hearing all this, how it works and who it's really for, could this very specialized tool be the missing piece in your family's retirement puzzle right here in Georgia?
If you're curious if any of this has you thinking, that might be me, I'd encourage you to just take the next step. You can schedule a totally free consultation with Georgia Safe Retirement Planners and see if this could actually be a fit for your situation.
At Georgia Safe Retirement Planners, our biggest priority is just building a lasting relationship to support you. To schedule your free consultation, you can visit us online at georgiasaferetirementplanners.com or just give us a call at 470-888-7233. You can also find us right at 1124 Canton Street in downtown Roswell. Just remember, it is never, ever too early to start planning for your future.